Hi guys, this is Richard from the Stable Center, and today I'll be covering Chainlink. Full disclosure, I do own Chainlink, but nothing I say in this video is financial advice. Anyway, today we'll start things off with more stablecoin adoption. Now, I do notice most of you guys click off after 5 minutes, but I do urge you guys to watch the entire video as I will be going over 4 possible Chainlink bull market price targets for today. So, in the past month alone, over $4 billion has flooded into stablecoins, the biggest monthly surge since the bull market peak in November of 2021, and it's no coincidence. Major U.S. cryptocurrency legislation is finally gaining traction in Congress with 2 bills in the spotlight: the Lummis-Gillibrand Responsible Financial Innovation Act and the Clarity for Payment Stablecoins Act. These aim to lay the groundwork for a clear regulatory framework around stablecoins, giving institutions the green light they have been waiting for. And the market is responding fast. We are seeing a sharp uptick in new inflows, with giants like BlackRock launching tokenized funds and even PayPal rolling out its own stablecoin, PYUSD. Now, this just isn't hype, it's a complete shift in the tide. The United States is waking up to the stablecoin race, and with legislation on the table, it could open the floodgates to trillions of dollars in tokenized real-world assets. This surge is Wall Street's signal that the next phase of cryptocurrency adoption is no longer speculation, it is now becoming infrastructure. Speaking of Wall Street, Goldman Sachs and BNY Mellon are quietly leading a financial revolution. They are issuing tokenized money market funds on the blockchain, and according to JP Morgan, this wave is starting to rival stablecoins in a very large way. Whilst stablecoins like USDT and USDC still dominate cryptocurrency payments and decentralized finance, tokenized money market funds are exploding in popularity with over $1 billion in value locked. Why? These funds are fully regulated, offer real yields, and bring traditional finance directly onto the blockchain. JP Morgan's latest report says this is part of a much larger trend, the tokenization of real-world assets. And if stablecoin regulation clears the path, institutions may pour billions into on-chain treasuries and funds. We are not just witnessing cryptocurrency evolve, we are witnessing Wall Street build a new financial system, one smart contract at a time. Okay, so let's start the Chainlink analysis off with some risk and regression analysis. So if you take a look at the right-hand side of your screen, you can see various risk levels. The colder colors, like blue and green, represent times of low risk, which are the best times to purchase Chainlink, and the warmer colors, like orange and red, represent times of high risk, which are the worst times to purchase Chainlink. So after Chainlink nearly doubled off the local low set in June, Chainlink's risk level has jumped a little bit to 0.04, which is still, relatively speaking, insignificant. According to risk analysis, buying Chainlink today is still considered low risk, not financial advice. So today we already have the regression lines on. Regression is really just a fancy word used by mathematicians to say lines of best fit. The best times to sell Chainlink is when Chainlink is trading above the red regression line, indicating that Chainlink is overvalued. And the best times to buy Chainlink is when Chainlink is trading near or under the green bottom regression line, indicating that Chainlink is undervalued. As you can see on screen, all the regression lines, the green one, the gray one, and the red one, are now accelerating to the upside along with price action itself. We spoke about this before. If this current cryptocurrency market cycle tops out in Q4, like previous cryptocurrency market cycles, if you follow my cursor, we could be looking at a potential $300 Chainlink by the end of this bull market. Just a quick disclaimer, mathematical models are based off of historical price action, and we all know that history cannot solely be used to predict future price action. So let's actually move over to TradingView and pull out the Wyckoff accumulation schematic. Okay, so same thing as usual. Chainlink is trading in Wyckoff accumulation and in the process of completing its third LPS, which stands for last point of supply. In an LPS, market makers accumulate whatever Chainlink supply is left on the market before the eventual breakout to the upside. As you can see on screen, the second LPS, which bottomed in August of 2024, bottomed right between the 0.618 and 0.786 Fibonacci retracement levels. Fast forward to today, the third LPS also appears to have bottomed inside the blue Fibonacci retracement support area between, once again, the 0.618 and 0.786 Fibonacci retracement levels. Now today, let's actually go over some bull market price targets. So the first bull market price target for Chainlink is at the white 1.618 Fibonacci retracement at $60. I talked about how important this ratio is when it comes to trading and investing a few times now. Remember, the 1.618 Fibonacci retracement actually caught the 2023 bear market low for Chainlink. Let me show you guys a live example. Yeah, the 1.618 Fibonacci retracement caught the 2023 bear market bottom. Now, nobody can exactly predict the future, but it stands to reason that the same 1.618 Fibonacci retracement may catch the bull market top, which is why $60 remains a potential bull market price target. The next potential price targets are the 1.236 to 1.382 Fibonacci retracements located anywhere between $92 and $131. If Chainlink blasts past those levels, the next potential price targets are the 1.618 and 1.786 Fibonacci retracement levels, which span between $230 and $342. By the way, I'm not pulling these numbers out of my behind. Do this yourself at home. Take a Fibonacci retracement from the bull market top to the bear market bottom, and you'll get these exact same levels as I am showing on the screen. Now, if we get super lucky, and by God's miracle, we get the sun, moon, and stars to align just perfectly, Chainlink can hit the final golden window between the 2.272 and 2.414 Fibonacci retracements, which would give us a $1,000 Chainlink. Now, before you get your hopes up, I just want to say one thing. Expectations lead to disappointment. If you are purchasing Chainlink today and expect it to hit $1,000 and it doesn't, you will not only be disappointed in yourself and want to beat up the guy who gave you hope, aka me, but you will be tearing your hair out knowing you will be bag holding Chainlink down 90% in the bear market and will have to wait multiple years just to get an opportunity to exit. So how am I approaching this? Well, this is my third cryptocurrency market cycle, and I have learned to expect the worst and pray for the best. In other words, I am mentally and financially prepared for Chainlink to top out at $60 and pray to the cryptocurrency gods that we get a 3 or 4-digit Chainlink. I don't want to use the G word and say $60 is guaranteed, but my primary expectation is for Chainlink to hit at least $60 this bull market cycle. Now let's zoom in for some short-term analysis. So in the last video, we talked about Chainlink finding support at the white Wyckoff demand trend line and finding support on either of the blue Fibonacci retracement support zones between the 1.618 to 1.786 and the 2.272 to 2.414. Lo and behold, Chainlink did indeed find support at the 1.618 to 1.786 Fibonacci retracement levels, and now has bounced over 10% before dropping a bit today. Chainlink traded right at the white 1-to-1 trend-based fib extension as communicated in the last video at $19.46, which is previous resistance. So, if Chainlink clears both the $19.46 and $20.98 levels by getting weekly closures above those levels, Chainlink will be on its way to the white 1.618 to 1.786 trend-based fib extensions located anywhere between $27.80 and $30.63, respectively. If Chainlink gets rejected by the same fib level at $19.46, this will most likely lead to a drop to anywhere between $16.20 to $16.56. Okay, so let's move on over to the Elliott Wave count. Not much has changed. I am still expecting an impulsive move out of this multi-year sideways trading range to brand new all-time highs. We still need waves 3, 4, and 5 in green to complete white wave C of our blue overshooting B wave. The targets for an overshooting B wave typically span anywhere between the 1.236 to 1.382 Fibonacci retracement levels, located anywhere between $92 and $131. Now zooming in and moving into the short term, also, not much has changed. In the short-term Elliott Wave Analysis, in the last video, I issued out two conditional statements. If Chainlink breaks below $16.07 to if Chainlink breaks below $16.07, Houston, we have a problem. And if Chainlink holds support between $16.07 to $18.17, then up we go. Chainlink did end up finding support inside our blue Fibonacci retracement support area and has pumped over 10% in a short period of time before getting rejected today. Am I absolutely positive that blue wave 4 has put in a bottom? Not really, to be completely honest with you. I can't say with 100% certainty because we could be dealing with a potential flat structure or an Elliott wave triangle. But to be completely honest with you, when it comes to short-term structures that are quite unreliable, as long as support continues to hold, which it is, I am in favor of more upside. Okay, so let's close this video off by taking a look at the Chainlink against Bitcoin valuation. So the last time we took a look at this chart, we talked about how the Chainlink against Bitcoin valuation was most likely going to find support at the blue 0.382 Fibonacci retracement and the white 1.618 trend-based fib extension And lo and behold, the Chainlink against Bitcoin valuation is finding support at those levels. Now, let's zoom out and see where the Chainlink against Bitcoin valuation may top out for the rest of this bull market. Now, you all know the drill already. Investing and trading revolve around any derivative of the 0.618 Fibonacci retracement levels. So the 618 retracements are located at 0.0005988, which is roughly about a 279% pump from here against Bitcoin. All right, that's all I got for this video. Thank you guys so much for watching, and I'll see you guys in the next one. Take care.